Welcome back to the channel. My name is Patrick, and in today's video I'm going to show you how I traded a ranging market or a consolidated market. So as you can see here, this was yesterday on Monday, today's Tuesday. As you can see here, price was stuck within this range here. Okay, it wasn't going up or down, just bouncing from these lows and going up to this top of the range and coming back down. Now, most people avoid this, and for good reason, because it's not moving, so you don't really know when to get in, when to get out, if you're going to be a part of liquidity or not. So the best thing to do, to be honest, is to avoid it. But I was able to trade it, and I'm going to show you how I traded it, and it's all based on supply and demand. When I see a range of market, I just see plain and simple supply and demand. Down here, where the price pushed up, that's the demand. Every time price pulled into it, it got bought up. Pulled into it, it got bought up. Pulled into it, it got bought up, right? Up here, where price is being held, if you zoom out onto a higher time frame, you can see you are in a supply zone. You are in this supply zone, you're within this range. So price is just pulling into this, it got pushed down, pulled into it again, it got pushed down, pulled into it, it got pushed down. So how do you trade this? Basically, you're buying from the lows and you're selling from the highs. So if you got into a position here, down here, once it gets to the top, you want to get out. If you go into a position here, once it got to the bottom, you want to get out. The issue is this, what's going on right now. You become a part of liquidity. So if you don't know, if you haven't got a idea what direction the market is going, it's very dangerous because you could get taken out at any moment, okay? Whether it's just by, for instance, you got equal highs here, it came out and just took you out by 1 or 2 pips, then it went in the direction. So if you had a very tight stop loss, you will be taken out all the time, okay? So it is difficult to trade. It's not straightforward. It's not something I recommend, but I'm going to show you how I traded it anyway. And the way I traded it is how the same way I've been trading in the last few sessions is using my setup. So on M5, my setup was visible yesterday so many times on this pair. It was about 4 times, and I traded most of them. And actually took a loss on Friday because I was impatient. I didn't wait for my setup. I took a big loss on Friday. I was 5% down. Yesterday, I was able to make all that back and some. Okay, so I'm going to show you the first setup I took that day. So let's see if there's a bit better to zoom out. Let's zoom out a little bit. So we have price here. This is the start of the session. This is around the Asian session. Price came up here. It consolidated and then it pulled down. Now, if you zoom out, you can see that price was trending previously before that. So it was trending, got to a high and it slowed down there. Why is it slowed down? Because it's in the higher time frame supply zone. This is the supply zone that sent this down, okay? Then it pulled up here and it just held right there, roughly at the 50% mark of this move. So to me, this is just a continuation of this, okay? So I am bearish, yeah? So initially in the morning, I saw this, I thought, I'm gonna hold this from, get into a move from here, and I was gonna hold it to try run these equal lows here. But that didn't happen yesterday. So I was well disciplined yesterday. I stuck to my scalping and I was able to get the moves. Okay, so I'm going to show you the first move again. So we had a trend, it was coming up, got into supply zone and it slowed down. To continue this trend, it's meant to pull into this zone here, respecting this low. Okay, so respecting this low here, price pushed up there, it's meant to respect this low here, and from here it pushes out to beat this high to continue its uptrend. As you see, it didn't. It pulled there, flagged up and pushed down. So that is a reversal sign, reversal setup, which is basically the beginning of a trend potentially, or a simple 5-minute reversal, whatever it is, we don't know yet. But this is my setup, okay? So I want it to push up, fake break up, pulls down, flags, then pulls down again. So that's our first pole, that's our first flag, and that's our second pole. So I want price now to, from this low here, to pull back in, tap this low here, use this as a resistance, if you like, or support, and then push out again. Yeah, so that is my setup. So as you can see here, it pulled out, so it pushed up, stopped, pulled down, pulled up, and came down. So as price came back here, I entered roughly around here. My stop loss ideally would have been here, but like I said to you, the best place to place your stop loss would be the top there. Okay, the highest here where the move was generated, where it started, the origin of the move. Okay, so we are risking roughly 13 pips. 13 pips for me is okay. That's not massive, so I'm happy to trade that. Okay, so I could leave my stop loss there, but 13 pips, I'm happy to leave it there because I know that price could pull back and tap into this zone multiple times. As you can see, it did. Okay, so I think I entered right there. Yeah, I'm going to show you my trade history in a bit and you can see what I'm talking about. So I entered roughly there, it pulled down, and I'm looking for maybe 6 pips. I can't remember what I was looking for. 6 pips for me, depending on my lot allocation, was roughly 1% of my 60k account. So maybe I'm looking for 6 pips, or I'm looking for a one-to-one. So one-to-one would be 13 pips. So 13 pips from down here would have been here. Okay, so I can't remember if I got out there or I let it run. Actually, I do remember. I wanted to run those equal lows I showed you, so I did let it run. I did take some partials and I tried to leave a run. So I was disciplined. I took my partials. I took my 6 pips probably around there. Price then pulled up all the way here against me. I had moved my stop loss down to here, and then I think I moved it to break even. I can't even remember, but I wanted so yeah, I moved my stop loss here, came in, respected my stop loss, came down, ran there, and I think I started getting out when I saw this reversal here. And as you can see, price would have stopped me out because I was on break even here, so I would have got stopped out. So that's what happened for my first move. So when it got down here, I expected price to pull down here. So this is a pole. I expected to flag up, tapping into this and pull out again. If it's to continue, it's downtrend. But what it did was hold here, push up there, pull down, held there again, and pushed up there again. When it broke this high here, I believe that it was reversing. Okay, so because what we got here is now a fake breakout. Our first, our failed breakout. Sorry, this is our failed breakout. Our first pull back here. That's our first flag. So when price pull back into this zone, I take it up. So I actually caught it very early. I caught it as soon as it broke here. I got in straight away. I caught it right there because I saw it. I believe it was going to pull into this and push up again. So I caught that second move up. So again, I scalped it because it had pulled back into the supply zone, which could have held. I believed it was going to break through, but then again, I thought, you know what, let's just scalp it, stay disciplined. So I scalped that move there as well. Okay, so it then happened again. This move I did not take because at this point I had taken so many trades because I took these two here and I took one on GU and I took one on US Swiss because they were both ranging in the same way, and also US Swiss is what helped me see this move as well. Okay, so I took a scalp on there. So I left it for a while and then I came back in the New York session to see what the New York session was going to offer. So this would have been around the Asian session. This was the London session move. And then this move here was the New York session. So New York session did exactly the same thing. This time it just runs these guys, pulls that, giving us the impression that it's going to start trending up. Yeah, because it trended all this way up here. So we had our pole, our flag, our pole, our flag, our pole. It came into here, still respecting this zone. So that's a flag. It pulls up, then it comes down. So it should, from this point here, it should push up again. But as you can see, it pulled up and then it broke the structure here. So that becomes our potential reversal. So when it broke this structure here and pulled back in here, I entered here for another scalp. in this situation, my stop loss would have been 19 pips. That's massive for me, okay? And I know, well, it's 19 pips. I know this session has the ability to just walk through stop losses and stuff like that. So what I did was place my stop loss on the next high. So it was this high here. So I was actually risking 13 pips. And again, like I said, 13 pips is not massive for me. And I was willing to hold it to do a one-to-one. So one-to-one would have been here. So I think I held it because what happened, I got in here. So this would have been my first pole. That's my first flag where I would have preferred to left my stop loss. My second pole, as price pulled back in here, I entered roughly here. It started moving my direction. Then it just decided to shoot past, taking out my potential stop loss if I left it there. And I left my stop loss here. So, and it pulled up and respected it. Okay. New York session tends to do this. Okay. That's why I say the best place to leave your stop loss is at the origin of the move and base your risk on that. So that's where I should have placed my stop loss, and I shouldn't have over leveraged. I should take it into consideration. This is my risk, 19 pips, and base my move on that. One-to-one is difficult to get because it's stuck in the range, remember. So 19 pips from here, you wouldn't have got that, okay? Like I said in my previous videos, my preference is to get out on this third leg out. So that's one, flag, that's two, flag, and that's three. So when it beats this last low here, so that's one low, that's two low, that's the third low, that's the third leg out. So when it comes down here, I am out, okay? So that is my TP. In this situation, my TP would have been 7 pips. As you know, I typically trade with 10 standard lots with this account, so 10 pips. I'm easily making 1% on the account. So that's the trades I took on the euro. I don't want to make this video too long. I just really wanted to show you how I traded this zone. I was able to catch at least 4 trades there, 1 there, 2 there, 3 there. There was a 4th one. I can't remember if I took that, but also this morning, as you can see, it's still actually stuck in this range. But this morning it also gave me my setup and I just took it. So here's my setup again. So price was trending from here, consolidated, it pushes up, giving us the pressure that's going up. If it is to go up, it's meant to pull into this zone here, hold it and push up again. It didn't. So it pulled down here and it broke this zone. So now it may still be in this demand zone here. It could push up again to try a continuous trend, but what it did was held here and then broke it down again. So now we have a start of a trend. So we have one pole, that's our flag, that's our second pole. We're looking for a third pole. So when price pull back up into this pivot point here, that should be my entry. Should be my entry here, and I'm trying to beat just this low, and as you can see, that's what happened. So I've just finished trading actually, so I've just taken this last trade and I decided to get this video out to you rather than overtrade, carry on trading and overtrade like I did yesterday. Really overtraded yesterday. I'm not trying to do the same thing today. There is major news today and there wasn't no news yesterday, so that's why I overtraded, because when there's no major news, price tends to consolidate and I'm able to trade the range, which is quite simple for me. So it's something I was able to do yesterday. I'm not going to overtrade today, so I'm done for the day. So this was my, I think, first or second move of the day. No, this was my first move. I took one other, a small scalp on GU, and I was done, okay? But this was my first move. So trending up, pushes out, giving us the impression, no, breaks it down, okay? That's not confirmation. I'm not going to jump in there. I want another flag. It flags, okay, cool. Now I want it to push down, okay? So I saw that my entry should have been here, but I did get in earlier around here. I think it was 07. So this is 06. I got in at 07. So I got in way early. I got in there. Reason is because what I saw on the higher time frame was that we are simply in supply zone here, like I showed you. we've been trending up for a while, reversed here, and it's now taking out all these lows. Okay, it's aiming to take out all these lows, and that's what it's doing right now. It's trending down. If you go to US Swiss, you can see this is actually trending up. This is trending up. Okay, so there's a low there, higher low, higher low, higher low. So this respected this low well yesterday, and that's why I believe that this trend was being maintained, and that's why I was in the bearish mentality with the US note with EU, because EU was sitting in this supply zone trending, then US Swiss was doing the opposite. And if you don't know, they are well correlated. It doesn't mean they're always correlated, they are well correlated. So sometimes they move, most of the times they move in the opposite direction. You could backtest that for yourself and see, and maybe even develop a strategy behind that. I do tend to use it as a as confirmation of a move, and I obviously trade with my setup. My setup is all I need. I'm just scalping moves, so that works for me. So I was able to then catch, because of that, what I saw, I believe that we were in a supply zone. I could see here that price just refused to break above this zone here, this high here, and the reason is because it was sitting in the supply zone and it was sitting at about 50% here. So every time it touched it there, it was pushing down. So when I then saw this morning that the Asia session respected that last high, and that last high respected that last high, and that was the New York high, that would have been London high, that was the Asian high, that was New York's last high the previous week. I could see that every session was respecting that that supply zone. So when I saw this move here and it pulled up here, I got in early because I believe this high was going to be respected because it was respecting the previous ones. Okay, so that's why I got in early. I shouldn't have done that. I should be more disciplined and more patient, because on Friday I got in early and I got caught out. So today I should have waited, but I just thought that it made so much sense. I got in early, did the appropriate risk, and I just held the move. So when I got in here and price had pushed down here and pulled all the way up here and had me in drawdown, I was a little bit worried, but I stuck to my guns, left my stop loss here. My stop loss was there. My entry was around 708, so roughly around here. Yeah, roughly around there. And I was holding it to do a one-to-one. So my risk was 13 pips and I wanted 13 pips. I would have got it. I did not stick around for 13 pips. What I was looking at was just running these lows here, these equal lows here. And as you can see, price did that. Okay, so I think I got out a little bit earlier because it held me in this move for about an hour or two, made me a bit anxious, and I decided, you know what, as soon as I get my 1%, which was about 6 pips, I got out and I left the runner. I didn't need it to go any further. So show you now my trade history, and I'll show you this trade. As you can see, I got in there, held it through all of this drawdown. It only drew me down a little bit, but you know, when you sit in only 5 pips, but when you sit in this zone for a long time, an hour or two, especially the type of person I am, I don't like sitting around for moves. So it made me anxious, and as soon as I was able to get my 6 pips, yeah, 7 pips there, I got out. So I made about at least $700 on this move just there. Okay, could have been more. To be honest, I'll tell you, so in terms of the account progression, I need to make 5% to pass the stage. If I held this move, I would have finished there. Okay, but the reason I decided to stay modest and get out and not be greedy is because news was about to be released, and as you can see, it's market's just reacting to the news right now. And also, I've only had 2 profitable trading days. I still need a third one, so I will still need to trade tomorrow. So I don't see no point in finishing this account today. I might as well wait for my next setup and take my time. So yeah, that's it really. I showed you all the trades I've taken on EU yesterday as well. So I caught that move down there, caught this move back up, and I caught that move in the New York session. So it was about 3 trades. I did take some little scalps here and there, but it was about 3 major trades on Euro yesterday, and I caught a few on the other pairs I mentioned. So that's it really. I really wanted to show you guys this, that you see my setup is consistent, it's visible daily, sometimes once a session, and it's all you need. You don't need to over leverage. I know some people think scalping it's only 5 pips, 6 pips. You can't really make money there. I've made a fair bit of change doing it. I've made a fair bit of change. So where's my trade history? So just if I could find it. Okay, so in the last few sessions, as you can see, 400 there. That was my last scalp on GU today. That was 700. That's the move I just told you about on the Euro that you can see just in front of us here. 600, 800, 100. Those are the little scalps I've got. 500, 400, 800. You know, that's what is that? That's the loss I took the previous day, is it? So what we're talking about, maybe in excess of 5,000 in 2 days, 7% in 2 days from scalping. Okay, it was more than 7%, 5 yesterday to 9%. I mean 9% in 2 days from scalping. Okay, so decent setup, modest expectations. It's available daily, and because it's available daily, you don't need to over leverage. 9%. If you are trading with a pot firm, you know what 9% means. You know, 2 or 3 days you could pass an evaluation stage, or you could pass a stage, make it 10%, and you're going up, or you're making real money. So there's no need to do more than that. Okay, so that's what I'm trying to tell myself as well. I'm trying to be disciplined. Hopefully this is useful for you. If it is, you know what to do. Hit the like button, hit the subscribe button, support the channel, and I keep on getting these videos out to you as soon as possible. Until next time, this is Patrick signing out. Peace.